What's going on, everyone? So we hit a very big milestone in the stock market today. As you can see, guys, right up here I have the 5-day history pulled up for the S&P 500, and it was just a few moments after the market opened today that the S&P 500 ran over 3,000 points. Now, a lot of people believed that this was actually going to happen in 2018. As you all know, end of 2018 and the start of 2019, we have seen so much volatility due to a number of different things. The NASDAQ index also ran up well over 8,228 points at the start of open. That is also a record. And that index ran all the way up to 8,218 points at market close today. So Dow Jones, the S&P 500, and the NASDAQ all set their all-time high in one trading day, and that was today. So we got some pretty big news. What I really want to focus on, guys, are we in a good place to buy? Is this bull market going to continue to run for a while? Being that we just made all-time highs on all of the indexes, should you wait for a pretty good pullback to buy more stocks? So, as always, guys, make sure to drop a thumbs up on this video. I appreciate all the support. And make sure to subscribe to the channel if you have not done so already. And so, in case you have not heard, the reason we've seen the big run on the indexes today is that Jerome Powell, our Federal Reserve Chairman, he has signaled a rate cut is coming very, very soon. So he used the right combination of things to say, and I guess he left enough hints sitting out there to lead us all to believe we do have an interest rate coming in the very near future. Now, when Michael Lowengardt, he's the Vice President of Investment Strategy at E-Trade, said he thinks it is safe to say Powell has his dove hat on and a quarter rate cut is coming very soon. What's interesting, though, is how quickly Powell pointed abroad to support the case for a weakening economy, because the reality is things are actually still pretty strong here in the United States. And last week's job numbers made that very clear. Now, if you want to go back to the jobs numbers before that, that was the weakest report we had since 2011. So I guess what we all can do here is we can kind of agree to disagree a little bit. Our economic numbers are very inconsistent, okay? I think that is the best way to describe them right now. We're not seeing any real consistent growth. We're seeing big drops and then, quick recoveries, and then a lot of instability in some of those figures. Now, of course, where I have seen this the most is in earnings growth, okay? If you want to go back to 2015 through about 2017, even the first 6 months of 2018, earnings growth was there with companies quarter after quarter. Even when a company would miss, we always were pointing to forward guidance. We were always pointing to bigger and better things, and that really started slowing down in about June and July of 2018. So in a testimony to the House Financial Services Committee, Powell said business investments across the United States have slowed notably as uncertainties of the economic outlook do tend to linger. Cross currents have re-emerged. Many FOMC participants saw that the case for a somewhat more accommodative monetary policy had strengthened. Since then, based on incoming data and other developments, it appears that uncertainties around trade tension and concerns about the strength of the global economy continue to weigh on the U.S. economic outlook. Like I just mentioned, if you really keep a close eye on quarterly earnings, you have so many things weighing them down. Probably the biggest one is just the inability to grow at the trend they did. Like I said, in 2017, we got used to the standard from companies that companies were always going to be beating on earnings, having massive forward guidance, and we're just not seeing even the best companies in the world are tripping up quite often now, okay? So this has really turned into a trader's market and less of an investor's market. You're having a lot more opportunities to short stocks. You're getting a lot more dips. Honestly, in my opinion, you're getting a lot more opportunities to make more money. Now, he did mention that the U.S. economy remains on very solid ground. I have to agree with that. There's not a single metric or one single report that I have seen that screams a recession is coming, maybe outside of the inverted bond market. But when so many of these things were happening at once, it did cross my mind. As a matter of fact, I made several videos where I was warning people to be ready and be prepared for a recession, okay? The major stock indexes pared gains as Powell answered questions from lawmakers. While answering these questions, Powell reiterated that the current trade conditions and muted economic activity have dampened the U.S. economy's outlook. So it does appear that we have an interest rate coming very soon, and as a result of that, the indexes run up and made all-time highs. Not quite sure how exactly I feel about that, because the interest rate does give companies the ability to grow again, but it also hurts banks, and this can create a very confusing situation, maybe more than a bullish situation. Now this is my argument that if you are buying a lot of calls right now, you might want to slow down a bit and at least think about taking some profits, is because traders have priced in a 100% probability of a Fed rate cut in July, okay? And that's according to CME's group FedWatch tool. Stronger than expected June jobs report tempered expectations for a more aggressive easing. So keep that in mind, guys. If we do not get a rate cut in July, you could see the markets trade back for a period of time. And when there's uncertainty like that, I think that is really what creates opportunity. And as far as I'm concerned, most of this stuff is just as reliable as a coin toss. You never know going into certain weekends. Like, for example, when Trump met with China at the G20 summit, nobody knew what the outcome was going to be until it happened. And of course, like I said, with the Federal Reserve and their rate cuts and just the way they have tailored the nation by their statements, we don't really know the outcome of any of that, okay? We just have to wait, kind of be patient, and trade along with these trends. You know, I think if you're a relentless bear and you think the market is always going down, obviously you've got torched many times this year, and the same makes the case for the last year and a half if you are a relentless bull, okay? If you're always buying call options on the big dips, you've probably made some really good money. But once you start getting up to all-time highs and the indexes make all-time highs, I think you always have an opportunity to sell on some of those and consider trimming back some of those positions. And even in your long-term investments, you might want to think about taking gains on some stocks if your grand total is starting to look pretty good. But at any rate, let's just talk a little bit about short-term buying and selling. What side of the fence should you be on? Now, guys, I think it is pretty safe to say, for now, we do have most of the worry of the trade war with China behind us, because the last set of tariffs did get suspended at the G20 summit, and we're getting mentions of a rate cut from Jerome Powell. And as you can see here, the next FOMC tentative date is set for July 30th to July 31st. So that gives us roughly 3 weeks before the Fed is going to meet again. And like I said, keep in mind, you might want to be sold out of any positions that you're worried about just in case we don't get a rate cut. And I do strongly believe that. What we just talked about a minute ago is that I think you're safe till the next Fed meeting, but the market is pricing in the 100% probability of an interest rate cut. That's why these indexes are up so dramatically high, and if we do get that, we could see another rally. But if in case we don't, keep in mind, he did also mention a lot that we're on pretty solid ground here in the United States. So there's also the possibility we don't get an interest rate cut. You could see the markets tick back. So I think for the next 2 to 3 weeks, the markets are going to remain pretty bullish. And then we're just going to kind of pull up to another time of basically uncertainty for a few days. And of course, we're all going to hope for it to be bullish. Then again, there's probably a big handful of us that do not mind the pullbacks because it gives us more opportunities to buy stocks on the cheap. But that is my short-term forecast, okay? I think the next 21 days, we should remain pretty bullish. We'll probably add to these all-time highs. I would not be surprised if the S&P got up to 31 or 3,200 points. And I think the Dow Jones could very easily hit 28,000 points, possibly by early next week. Just kind of depends on what we get. But then be tuned in at the end of July and the next Fed meeting, and we're going to see what kind of decision we get. Bear in mind that the market will show a reaction pretty much either decision that is made. So anyways, guys, that's all I got for the video. Go down to the comment section and tell me, do you think we are definitely 100% gonna get a rate cut at the end of July? Share your thoughts and opinions about this. I would really love to hear what you guys got to say about it. Thank you as always for watching the video, and have a great day.